Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, April 24th, 2012 is sponsored by Realtick. All right, let's get this party started, guys. Markets were up decently on the day. We're now coming right back into the flat line. I predicted a neutral day yesterday based on the fact that everyone is now just watching Apple into earnings, which is out after the markets close today. And tomorrow we have the Federal Reserve FOMC policy statement. We will hear from Bernanke in a press conference later in the day. So really, you're just looking at a market that's a little on edge because of the Apple earnings. And at the same time, they're wondering, are we going to hear anything about QE3 again? Is there any going to be reemergence of that type of talk from the Federal Reserve tomorrow? And for the most part, as you can see, the markets are just hopping around, slightly positive, back to the flat line now in anticipation and waiting carefully here. All right, so looking at the levels, this red line worked perfectly. These are all lines that I have on my chart for our members in the Intra Day Stock Chat and in the Research Center. And sure enough, they're support resistance levels and should be used as such. As you can see, the red line worked perfectly. If I zoom out and you want to see where that comes from, pivot high right here, pivot lows right in here, and again, pivot high right there, and I could just go back and back and back and show you how awesome these levels are. There's a gap fill going all the way back to the 12th of March where this comes from. It even goes back further. But for the most part, my point is these levels are awesome. You can literally trade off of these levels, bullish, bearish, buy long, short the market off of them, and we can give them on any stock out there. We do give them on various stocks like Apple and other stocks as well. And I have to say, folks, ever since Apple's been above 600, the only reason you should have been buying Apple was if you were totally insane. I've said that over and over again. I've preached that even when everyone was upgrading the stock and saying it was going to go to $1,000. I said it's going to fall, and sure enough, Apple is down another 16 bucks today, just getting pummeled prior to earnings. Look at the fall on the daily chart. I mean, this is just an epic collapse on the stock. The only level I like right now, if it came down to on an intraday basis, is this one right here, which is right around the 548, 549 area. So if you got down there, I might be interested, but for the most part, it's not worth holding into earnings, that's for sure, as we continue to see weakness in the stock and it collapse back down. It's funny because I've watching CNBC this morning and then comparing it to a month ago with Apple. Apple a month ago when it was trading at its highs, they couldn't pump it enough. I mean, Kramer was pumping it like nuts, saying buy, buy, buy. Here I'm saying don't buy, don't buy, don't buy. And then all of a sudden today, as it's down now, $90 off its high, they're saying don't buy, don't buy. This doesn't look good. Don't do it, don't do it. And believe it or not, I'm starting to get a little bit more bullish on Apple myself as I rotate. So just kind of funny how the media and the talking heads on TV are literally in the opposite direction of every correct call in the markets. But in the money stocks rises from the ashes and just makes the calls that make you money, whether it's long or short. We're going to be there. And we're going to be on the right side of this market and on the right side of stocks. Dow right now at 57 points. NASDAQ is trading down 18 on the back of Apple, obviously, and S&P 500 is up about 1.85 points on the day. Now, if we zoom in, you can see here on Apple, what I think is kind of interesting on Apple is that you got below this pivot low, which was yesterday's low of the day, and you're now just consolidating, which is actually slightly bearish. So if we don't recapture this and continue sideways, I'd look for one more final sell-off into the end of the day today into earnings. And then again, the more it sells off, the more I actually like it into earnings. Although, again, methodology here in the money stocks does not allow you to play earnings, as again, it's just too high risk. That's gambling. We don't gamble here. We make money consistently. Therefore, obviously, the odds are much higher in your favor if you follow the methodology, and you can make money. Again, no brainer. All right, looking at some other stocks out there, what else is moving? Baidu is taking a little bit of a hit today. Now, this stock, it got crushed yesterday and had a great bounce, and it's right back down to that double bottom 200 moving average. I believe they report earnings today as well. Starbucks, I think, is on to report earnings as well, which, by the way, I am short on Starbucks, and it's down 59 more cents. We went short right up here, guys. I mean, this was just a beautiful short call on Starbucks. We're in the money beautifully here. I'm going to take half of my position off today and take the profits just to cushion myself. I'll leave the other half on and play and have fun with earnings, but for the most part, you always want to protect yourself. If you want to make money long term and you want to be consistent, then you play the conservative trader role, which makes you great money consistently. You're not going to hit home runs always, but you make money consistently. That's how you survive. That's how you build wealth. There's a lot of amateurs out there that are cowboys, and they'll take shots and they'll try to swing for the fences every time, and they last about 1 month in the trading game and lose all their money. So obviously, I assume every one of you out there would want to be the long-term trader who does consistently well and then survives and trades for life. And that's what, again, we will teach you here at InTheMoneyStocks.com. And by the way, there's a 7-day free trial here at InTheMoneyStocks.com for you. Intraday Stock Chat is one product. The other product, which are both services, obviously, is the Research Center. Research Center geared towards the swing trader and investor, while the day trader goes more towards the Intraday Stock Chat. All right, so that's what we have going on there. Let's go back to the spiders and see what's going on. Apple's getting a little bit of a bounce now, and we still see the market selling off, though. So great sell-off there, as even though Apple's bounced about $1 off the lows here, the market's coming in. You're actually going to have decent support here on the spiders right around this gap fill. So gap fill is going to be at the 136.80-ish level, and that actually could be very, very good support to buy the market. All right, guys, so just be aware of that, and we'll continue to follow it. But right now, that's looking pretty good. Scanning through, again, we talked about Apple, which is getting a nice little bounce here. You can even see the spiders are now starting to bounce. When Apple bounces, it's rare the spiders don't bounce because the Apple stock itself is part of the S&P 500, and the SPY tracks that. So you can see that little bit of a bounce coming in. But gap fill is just a great level down here on the SPY. Should be big support. I don't really foresee this market going negative today. That would surprise me. But again, as I called out to my members yesterday, I said today should be a flat day, and that's exactly what it's turning out to be. Okay? Let's see what else we have here. Scanning through, we have Goldman up, we have JP Morgan up. Looks like financials are pretty strong. Looks like Dow components. Dow is really the leader today, which is not necessarily a good thing for the overall market, but it is a leading index with Chevron, Exxon, JPM up. We also have 3M. 3M had earnings, and even IBM is having a monster day, up $1.50. It's a solid day. I guess I wouldn't call it a monster day. All right, but bottom line is this, guys. The markets are going to be volatile between the next 24 hours. You have Apple earnings after the close. Tomorrow around midday, we'll get the FOMC policy statement. We'll get a press conference later in the day. I will be putting out new trade alerts. I put out trade alerts last night. I'm going to be putting out more in the Research Center. If you want swing trade alerts, if you want the best proprietary analysis that anyone has out there, including in hedge funds and institutions, then you join InTheMoneyStocks.com. Take care, guys. I got to get back to making money myself. I will talk to you soon.